Welcome back, C3 family, crypto connoisseurs. My name's Jake, and I got Al today with me. We're going to be going over a little bit of the market vitals and what we're seeing and kind of our projections throughout. So, if you guys are stoked on this content, please hit the like, subscribe to our channel. As you can see down in the banner below, we're doing a giveaway at 1,000 subscribers. So, with that being said, let's jump into this chart real quick. This is a screenshot of something I drew this morning, and basically this is measuring out the distances in the bull cycle. So right here from May 12th, 2014 all the way to April 2018, we were around 205 bars, 205, 210. So when we stretch that out all the way over to here, that actually brings us into March 14th, 2022. So there are some optimistic signals, but we're also going to be showing you some other signs of the market and why we're being cautious and what we're watching for. So over here, we have the distance between the top of the market to when we started to see our first trigger wave to come down to the downside, which basically signified that we are headed for a short to midterm bear cycle. So right here, the one on December 13th, we hit, or December 2013 of the second, we hit our high, and then once we started to go down and our blue trigger wave started to crest down, we were about 18 bars. So this is the weekly chart. So we're talking about 18 weeks. So we're about 4.5 months. So we saw the same thing happen here in the 17 to 18 cycle. And then when we map it out from our alleged top right now, which is where we saw a sell signal on our market cipher B down here at the bottom, which if you can tell, there's quite a bit of difference from these tops. These tops, you can see a sharp drop off in the trigger wave right here. And over here, we saw the same thing. So these sell dots, they tell us, that it's time to sell, that majority of the market's selling. So this could be similar to back here. And that's why I have this white line highlighted right here as a timestamp. So this was a nice high. We saw a huge run up, and then we had a cool down period for around 150 bars, and then we saw the next high. So this yellow bar right here could be, or this orange bar right here where the arrow is, could be similar to the white bar back here in 2013. So this could have been our recent all-time high, and now we could be going sideways. So if we jump over here into the chart that we had the pleasure of Al making this morning, and this is basically our projection on the long term. And as I was showing you back here in the 2013 cycle, that we saw a high and then we saw a cool off period and then we saw another high printed only 32 bars after. So I was very incorrect on that earlier statement, but if we did the same thing from where our alleged all-time high is right now, and we did a 32 bars, that would put us right here around November, September. So this is something we're still watching for. As you know, the charts are never the same, they just rhyme. And with that being said, I'm going to hand it over to Al and have him go through some of his charts. He's going to show you some cool things on the dollar, the NASDAQ, and also other asset classes that we're watching. So take it away, Al.
Thanks, Jay, man. Really appreciate it. How's everyone doing? What's good, C3? Welcome back. Sorry we haven't been around for a minute, but we're excited to be back and in it. So let's just get right to it. I always like to just quick overview on CoinGecko. You can tell we have health across the market. You look at the 7-day charts,
Hey,
and
Al,
it's
can you zoom in a little bit so we can see your CoinGecko?
yeah, my bad. There we go. Let's get this a little bit more user friendly.
There we go.
Um, So yeah, we just see nothing but health. I like to look at the long term, so I'm looking at the 7-day mostly. And you see a lot of health, nothing but green all the way down. I mean, the top 30, 40 projects until you get down to some stable amp. I mean, really, I would say majority green. So the last week, we've seen a lot of health and a lot of positive sentiment. And if you look across the all the news outlets, people are starting to show hope, and we're starting to look at the market a little bit differently. We're hoping that maybe the bottom's in, maybe we're there. We're not quite sure. So that being said, I think that we need to look at some other variables that affect our market. And one of my favorite variables to go to is the dollar. And the US dollar is represented over here. Let me go ahead and zoom these in for you guys as well. So the US dollar is represented over here. And this is, let me.
Taskbar on the right.
Oh, yep.
Your chart's a
Yep.
little bit larger. Cool.
And then let me get rid of some of this sloppy McSloppersons out of here and hide all these indicators. They're not necessary for this. All right. Do the same over here. My apologies, people. Should have gotten a head start on this. All right, so back to where we were. We're looking at the US dollar and Bitcoin. Over on the right, we have the Bitcoin chart, and on the left, we have the US dollar chart. And so here, if we line them up to about the same so we can get a good idea, let's put them both to 2020 right here. Line that 2020 bar out. You can see we're standing on day candles on both charts. And what I noticed when I was looking at this is that you could see almost an inverse correlation. And that's kind of what started to get a little interesting / intimidating at the same time, is noticing how correlated they are. And so if you start to step back a little bit more, you'll the correlation becomes a little bit more evident. And so when you go to week charts, you can actually notice that when Bitcoin pumps, the dollar loses its value, and vice versa. As the dollar pumps up, Bitcoin generally drops down. So if you notice the slotted lines on both charts, they actually will drag across at the exact, so we're at March 12th, 2018, and you can see it kind of drag across. And as the chart on the left goes up, the chart on the right goes down, and vice versa. Well, that to me kind of tells me that we can use the dollar as another indicator for the health of our crypto market. And the dollar, when you actually look at it and TA it by itself, it actually is starting to look kind of healthy. And the reasons for that, I mean, I think there's a lot of theories on the health of the market. One of them could just be the amount of inflation going in, more money, or maybe our economy is turning around. There's a variety of things that it could be, but nonetheless, it does look like the dollar is picking up in strength. And so if you come over here and use our favorite indicators right now, the DBSI, we are starting to show some serious strength and turnaround. And then that opposes with Bitcoin as well. So also another fun indicator is my rainbow chart over here. And this beautiful fluorescent looking thing is the total market cap. And this represents where we're at and kind of what we're looking for to hold. And right now, if we can hold above 1.3 trillion, I think that's shows some strength for the market. If we drop below 1.3 trillion, I think maybe it's time to entertain being a hibernating bull. I don't think that we should lose our bullish horns and our bullish perspective on this market, but I think that we need to be able to see all variables and possible outcomes. And sometimes it's okay if you hibernate as a bull and you just kind of stay away from the market and you wait for your time to come back in. So, I mean, right now it seems like the bears are continuing to feast before winter, and it may be until winter until the bulls can come out and perform. So there's just some concerns going on. Some of our charting this morning kind of gave us some pretty interesting time frames out there, looking more like the end of this year could be a possible turnaround. So there's still obviously a chunk of uncertainty that we wanted to share with you guys. And these are the variables that we're looking at. So this is actually another chart I did want to share with you guys. It was the US dollar in correlation to the NASDAQ. So this would be in correlation to stocks. Oh my goodness. I need to get in the habit of that. But I did try to go ahead and give us some indicators to show right here seems to be the point in where they started to inverse each other in a rather consistent manner. And that also seems to be during the COVID dump and the pandemic crash. So I'm curious to see how long this will stay correlated. But if the dollar starts to show strength right down here as it is, it seems like that would be a concern for all of our other asset investment markets. But anyways, that's just kind of some of the health, some of the vitals that we've been looking at. And that's really what I got on vitals for you guys right now. Jake, why don't you take it over, brother?
All right, right on, Al. Thank you very much for that. So one thing I wanted to show you guys was actually the open interest and also the futures expiration for the end of this month. So if we go over here to levitas.ch, they got a pretty cool interface where you can check out options expiries and all that stuff. So anyway, we're looking at the end of the month, June 30th, and if you look over here, you can see our max pain price around 36K. There we go, got that annoying thing out of the way. So yeah, around 36K is the max pain price, which would hurt the puts and the calls, basically the longs and the shorts. So this is typically where the market goes. It likes to go where it's going to cause the most damage. Market makers, that's their favorite thing to do, is build liquidity and then profit out on it. So that is for the end of the month. But if you jump over to the end of the week, the max pain price is around 34K. And then you can see all of these longs put in all the way up to 42. So it's pretty interesting. I think that's obviously where a rejection zone is going to be, but more realistically, it'll probably be around the 40 if we do start to see a short-term takeoff in the next week or two. So it is only Tuesday, and we're still watching the market, kind of figuring out the vitals and everything in the short term. But with that being said, guys, I wanted to show you how much open interest is also right now. So we have more open interest on longs than we do on shorts. So unfortunately, when this happens, usually it's flip-flopped and there's a lot of money made going the other direction. So we wanted to kind of give you guys all the tools and resources that we have. And here's a really cool website we just got signed up for. We'll leave the link in the description below, but Live Coin Watch. They have a lot of cool features on their website. One of our favorite ones is to just get a quick cryptocurrency market overview. This will show you the entire market cap value, 24-hour volume, as well as the Bitcoin dominance. Also shows you same thing, bids, longs, and shorts, and also how all the top dog cryptocurrencies are playing in the dominance. So this is pretty cool to actually see coins coming up. Unfortunately, it looks like USDT is around number 3 or 4 right down here on this green line. So anyway, guys, thank you for tuning in. We really appreciate you. Thanks for stopping by. If you haven't already, hit the like, subscribe button. We have a giveaway going away at 1,000 subscribers. And with that being said, remember, fam, stay cool, calm, and collect. C3 fam out.